Alright, welcome to the airdrop guide for today. I'll be covering airdrops, which I'm currently running, what they are, how they work, why they work, what to expect, and how to actually farm them. So let's get right into it. So what's a perp DEX? A perp DEX is, I'll show you what it is. It's just a way to trade cryptocurrency. Just what a day trader does, this is where they do it. Normally they do it on centralized exchanges such as Binance, Bybit, whatever, and this is decentralized. So this is just a web app. And you can connect your wallet to here and trade straight away. You don't have to do any identification or whatever. So that's what a DEX is. It's not really that relevant to what we're talking about. Secondly, what's an airdrop? An airdrop is just, according to the definition, is a marketing strategy used by blockchain projects to distribute free tokens to users' wallets, which is marketing. It's just marketing to get more awareness and to get holders more hyped, etc. It's basically free money for crypto users. Why do they give it away for free? Firstly, to get more attention on Twitter, because if you do a good airdrop, everyone is thinking about your project and it's going viral on X. Secondly, which is for our case the most important, if you're a DEX, you want as much volume on your exchange as possible. By doing an airdrop, you incentivize people to be active on your exchange, and you incentivize them to push a lot of volume because airdrops often get rewarded based on volume. So users who are farming the airdrop will do a lot of volume, which inflates your statistics, which then makes your project more interesting for investors to look into. So some examples from the past is Hype, which airdropped around 50 to 20k to its average user. It donated 8-figure amounts to some users. To some users, it just gave 7 or 6 figures, which is still a lot of money. And another airdrop, which is also a DEX, was Lighter, which gave away $700 million to its users, which is people got rich of that as well. They made 6 figures, some made 7 figures. So yeah, I'm not sure how much was airdropped in total. It's whatever. So you can make a lot of money with airdrops. That's the point. So let's go to the exchanges which we will be farming. First one is NATO, which is this. And the second one is VAR, variational, which is this. First of all, NATO. NATO is a project designed by Kraken, which is one of the largest crypto exchanges out there, centralized exchanges out there, which is now tapping into the decentralized field by launching its DEX. And they give out points every week based on your activity. I've only been farming this for a couple of weeks and I'm in the top 2000, but that's not really that high in my opinion. Anyways, they give out points weekly to their users, and in some time they will convert those points into tokens, and you will be able to claim those tokens and you will be able to sell them at a certain price. So that's NATO. NATO is expected to be a quite a large airdrop, but this one is most likely going to be even better than NATO, and they give out points as well weekly. As you can see, I did get quite a few points actually. Anyways, I have like 4 points here, which is nothing compared to NATO, but the points mechanism is different here, but it doesn't matter. Just your goal is to be claiming as many points as possible. So that's far. Those points will be converted into tokens. And to get on these exchanges, you need an invite code, which we have a few, but if you don't have an invite code, you can't access these exchanges. So it's kind of unfair for people who don't have the codes, because you can't get in and you can't make money off of this. But if you do get in, make some money, do some trades, get some activity in, so you can get some rewards. What to expect? When will NATO and FAR do the airdrop? This is expected to be in the third quarter this year, so a couple of months. They will most likely be releasing the airdrop. And how much dollars per point will it be? We had some info on this from our DeFi guy. He found out that multiplying the current open interest of the exchange by 3 is most likely going to be the valuation of the entire company. And based on that, he is estimating $150 per point, roughly. Which would be quite a lot, because then I'm already, after doing some beginner trades, I would already be making $600 from this, which is great. So there's really a big opportunity here. This can be a 6-figure airdrop if you do it right. So let's get into how to trade it. I will be trading live, which is super cool, of course. Perpetual. I'll be explaining my simple strategy for this. It's described here. What is delta neutral trading? Delta neutral trading is a very simple example of delta neutral trading. Is on exchange 1, you open a trade going long. On exchange 2, you open a trade going short. The same size, same leverage, identical entry. So if price moves up, in this trade you make money. If price moves up, in this trade you lose money. If price moves down, here you lose money, here you make money. That's the way it works. So you are never losing money, because if one goes up, the other goes down, and if one goes down, the other goes up. You are always break even. The reason why this strategy is very useful is because on a DEX you want to maximize your volume. You want to make sure the amount of dollars traded are as high as possible. And when you don't have any drawdown risk, you can put in all your money. You can sell your house, put in all that money into one trade, and not lose any money, because you are delta neutral. And you can make a lot of volume, which gets rewarded in points. So that will be our strategy. I will show how I'm doing it. Firstly, we want to look at the leverage to see if that's identical. Leverage 5x, 5x, okay. I'm going to go long on VAR, short on NATO. Ideally, you want to be profitable on NATO. And for VAR, it doesn't really matter. But yeah, I'll just be doing whatever. Let's see how much I can put in. Let's put in 10k here at 5x. And let's put in 10k here, market. Like this. Like this. Let's see if the positions get filled. If they are, this is filled. This isn't filled yet. Needs to go lower a bit before this is filled. And if it doesn't, I'm just going to do a market position, but you ideally want the trade to be opened at the exact same price, but that's really hard to do. Most often you lose or gain a couple of dollars on your position, maybe 10. So let's just wait until this moves a bit. Let's see if it's filling. Nice order, by the way. Okay, it's filled. So this is at $1 drawdown. This is at $4 drawdown. Oh, this is break even now. +4, -4. So a couple of cents margin. But this is my position now. I put in 10K on this exchange, which is 10K volume. I put in 10K here, value, roughly. So in total I have 20K, 10K on each exchange. When I close the position, that's another 10K. So then I have 20K in volume on both exchanges. As for what pairs to trade, you want to trade the new pairs, which he is sharing in Llama Lounge, because the exchanges tend to reward traders who trade the new pairs most for some reason. Because it's new, they want some volume on it. So just go with the flow and go delta neutral on these pairs. What to avoid? You should avoid opening long and shorts on the same exchange, because if they catch you delta neutral trading, they might punish you and not give you points. That's not what we're here for. We want points as much as possible. So we will just be doing delta neutral across different exchanges. You should also really avoid having different leverage settings. Always go with cross and whatever leverage you want. And keep your leverage a bit low, because there is a risk in airdrop in delta neutral trading, which is very small, but there is a risk, which is when you go 10x long, price moves up 10%, and no, this is a long position. Price moves down 10%. Your 10x leverage position will be liquidated. But let's say you were to be asleep. This one, which was the reverse trade, would be in 2x profit. So your net break even. But this position is cancelled because it's liquidated. It lost 100% of its value. So the position would be closed automatically. This one would be at 2x profit. But what if it was in 2x profit, but then it started going back up again? You would lose your profits on this position, and this would still be closed because you lost all your money. So it could happen that price did this, where your position gets forcibly closed on VAR here, and then price does this. So you lost all your money on VAR here, and now your position is only at profits of this level. So you lost a lot of money, basically. So you want to make sure that you are not getting liquidated while you're not up, or while you're not asleep, where you're not active, I mean. You want to make sure that you're always monitoring the charts and keep leverage a bit low. You can go 10x if you want, because what are the odds that price moves 10% while you're asleep? Really low, but you don't want that risk. So I'm always going at the 5x. Odds of price moving 20% if you're asleep is quite low, and I most often close my trades in the evening as well. So that's what you want to look out for. Keep the leverage the same, keep leverage settings the same. Try to get prices around equal entry prices in your longs and shorts. Trade the new pairs. Don't have too high leverage, and close your trades in the evening if you are afraid that your position will get liquidated. And trade around once every couple of days, once every 2 days, or once every day, whatever you want. How much money should you allocate, which is another good question, is, let's say you put 1K on each exchange and trade with the 1K daily or every 2 days. That's a fair point to enter, in my opinion, money-wise. You could also do less, but then your volume will be low, which I'd rather put in slightly more capital and make more volume, so you have to do less work, basically.